Good morning, everyone. How are we today? Oh, is this on? There we go. That wasn't on. How you doing, everyone? We're going live with kind of a Ask Me Anything. We've talked about this on the One Rental at a Time channel. I like to take questions every Saturday, 8 a.m. Pacific. We have a playlist on this channel with these live streams recorded, so you can go back and watch them. I think there's got to be 7 hours of just questions and answers. Last week, we changed it up. We're doing it again this week where we take live questions. Basically, I am doing this from my computer, not my phone. So the video quality will be a little, I guess, poorer, but it gives me so much more real estate to look at your chats and questions. I actually don't know how to do it on my phone because they disappear before I can read them. So probably user error, I am sure. But this way, I can go ahead and answer your questions. And really where I like the live questions is you can ask them and then we could dive deeper. Sometimes when I did the first set of interviews, which were just, 30 to 40 questions, one after the other, it didn't allow us to go deeper. It also didn't allow us to qualify, because it's certainly possible that I read your comments or questions incorrectly, or I assume something I shouldn't. So I have used these sessions to reorient myself and maybe actually ask the question that is answered. So one of the things I want to make sure we do here again is if you are watching this, we've already got 7 people on. Go ahead and put your questions in. I will do my best to answer all of them. Real estate investing, related. Yeah. Also, if you're watching this, do me a favor. I'd love to have you hit the subscribe button. Last time I checked, I think we're 26 away from 9,000. So if you could help me get to 9,000 today or tomorrow, that'd be pretty cool. I got to tell you, I never thought I never envisioned this YouTube thing getting there. So pretty cool. So I'm going to take one question that I had prepared. I have 4 questions seated. And then as you guys write questions, I will scroll back. So keep the questions coming online. I'm just going to buy us a little bit of time for more folks to join, more questions to get seated so we can move forward. So the first one, I was asked a variation of this question a couple of times. When I go to sell something, as I told all of you I did in 2019 in a big way, and in 2006, did I consider taxes? Right? Because either capital gains or ordinary income. And I'll take both examples, right? In 2006, I was very much still in the mode of, I need a bigger portfolio. I'm nowhere close to being done. So I was really selling because I saw assets were overvalued with what I owned, which proved to be right, but who knew? I could have been wrong. I was certainly wrong for 6 months. For 6 months, prices continued to go up, but ultimately, in hindsight, was a genius move. So I didn't consider taxes in that example at all because I knew I was going to leverage 1031 exchange and go bigger, what was called like kind. And we went a lot bigger. We did 10x. We went from 8 to 80 units. 2019, we were selling apartment buildings, very much for the same reason. If you've been following this channel, I've kind of pivoted on this, but I can't go back and undo anything that I've already done. So in 2019, we sold two decent sized buildings. One, we did another 1031 exchange. We had an owner come to us that owned 15 single family homes. He was willing to work with us in our time frame, so he wasn't in a rush. So we sold one apartment building, did a 1031 exchange into 15 houses. So much like 06, I sold what was expensive, did a like kind exchange into another asset. Then the other building that we sold was never performed up to expectations. It still cash flowed. It still had a positive yield. It still added to our net income every year, but it just never performed. So I took this as an opportunity to trim a bottom performer. I did not want to get into a situation where I had to do a bad deal. I looked at our likely taxable income for the year, and knew approximately what my basis was after depreciation on this building. So I estimated that we could hide most of the profit in our losses, most of the losses being depreciation, because we have a decent sized portfolio. So I considered taxes, but I don't let taxes drive my decision making. If I didn't have those losses to shield much of the profit, I probably would have still sold, because I wanted the asset gone. The asset wasn't performing. I wanted to raise cash. I happened to be in a situation where the tax consequences of said sale were minimal to zero, but I would have done it anyway. So hopefully that answers that question. So let me scroll back up and take the questions as they're coming in. So what are your thoughts on 1436? So actually I did a video. Actually, Arthur Garcia sent me a link. It's funny that his comment was first. Good morning, Arthur and Josh and everyone. Just in the last couple of days. So you could take a look at my thoughts. I think it's an 8 or 10 minute video. I've had a couple people comment. It's probably the most passionate or upset that you've ever seen me, which is true. I think AB 1436 is California government stealing from landlords. I think it is unconstitutional both at the state and federal level. I think it will pass, or a version of it will pass. I think it will be fought in the courts for years to come, ultimately ending in either the California Supreme Court or the federal Supreme Court, where it will be reversed, but the damage will be done. California will pay some big ass fine to some rich ass landlords, and the mom and pop landlords will be long since bankrupt. In the same video, I think AB 1436 hurts San Francisco, Oakland the worst. I think any city that is a big city that is under rent control, and I'm not talking state rent control, I'm talking city rent control, which San Francisco and Oakland have been under for a long time, those landlords are going to get smoked. They're already hurting. I mean, can you imagine rents falling 10% already, 2 months of free rent already, and now you have a 30 to 50% of the population not paying because they're being told they don't have to? I think we're about to see landlords in San Francisco and Oakland get crushed. Many of them will lose their properties. It won't be right. It won't be fair, but it will happen. And I think it's terrible. In the same video, I actually think the suburb landlord, assuming you're doing real tenant selection and qualifications, you're going to be okay. I've seen no deterioration in Fresno. I have hundreds of units there. Now have months to watch. Now it could change in a minute. Who knows? I mean, September could be different, but August, we're at 93.5%, 94% collection already. So knock on wood. I think the suburbs are good. We have waiting lists for houses. My property manager has over 6,000 units, and he has, I think last time I checked, 24 vacancies, which is record low. So I think the suburbs are solid. I really do. I think the big cities, Oakland and San Francisco, I don't think there will be ever a tougher time to be a landlord in San Francisco or Oakland. I think there will be a time to buy there, but it's 4 or 5 years out. It's going to be much cheaper. Rents are going to go down. Values are going to go down. Properties are going to go back to the bank. It's just going to be rough. So hopefully that's rough. That's my thoughts on AB 1436. If it's not clear, I'm not happy about it, but I fully expect the California government to pass a unconstitutional assembly bill. That's what I think. What is your strategy at the portfolio level, at the property level, in terms of reserves? So in the beginning, I got to answer this, Josh, at a couple of stages. So in the beginning, when we just got to those first 8 houses, we were starting to put away about $5,000 per house. That got to be sizable. So what we started doing when we started upgrading our houses to apartments is we set aside a $50,000 reserve bucket for the portfolio, because At some level, you don't need to keep adding reserves as you add units. As long as you have enough to cover that influx, you're okay. And we were cash flowing pretty heavily, so we could add reserves from cash flow, which was important. So in the beginning, I don't know your market, I don't know your costs, I don't know your expenses, but we set aside $5,000 per property. Those were houses. Remember, these properties were already ready to go, right? We fixed them up, so they weren't band-aids, right? We did the upgrades the right way. So that's what we did. And then we got to a level once the portfolio was big enough where we have a portfolio reserve. We stopped. We haven't added to that number ever. And it's worked for us the last 12 years or so. Hopefully that helps, Josh. Hey, Jeffrey. Yep. Yeah, so absolutely. Everything I have is for sale. I'm not tied to any other than my house where I live and where a house we own for our daughter. There's nothing we won't sell if the price is right. Again, Arthur, go back and look at the book. I own a lot of houses today, and I believe houses are what you should be buying today, especially with the demand, right? But there will be a time, probably in 3 years, maybe 2, where houses will become overpriced, just like they were in 06. You're lucky enough, because I know where you invest in Bakersfield, you can use California's affordability index. I don't know if Bakersfield's big enough to have their own, but Fresno's close enough. You could use Inland Empire as well if they don't have Bakersfield. I don't know if Bakersfield is big enough. But go back and look at the affordability index for Bakersfield if you can find it. And I'm going to guess it got under 20. It probably got under 15 in 06, 07. If Fresno ever gets back under 17, I'm going to start selling houses. I'm going to sell the worst houses first. And if Fresno, for whatever reason, got under 13, I'll sell every house I own. Think about what I'm saying. We sold that Norris Drive house that we bought for 107 for 264. You can all look it up. I've told you 100 times. It's 1818 Norris Drive East, 93703. It is 15 years later, and it's still not back to 264. You got to realize affordability index is made of 2 things: prices and interest rates. Interest rates back when I sold were about 6. They're under 3 today. So I leveraged a report from the Norris Group, which I've shared on this channel a couple of times, that shows that Fresno's median price could go to about 440 at a 3% interest rate. So if the median for Fresno is 440, the stuff that I own will be worth about 350, 320 to 350. I will sell every house I own at 350. Every house. No problem. So I watch the affordability index. If it's not clear, everything I say on this channel, I do every day. I'm not pumping things I don't believe in. So Arthur, I would go look at the affordability index. If Bakersfield is too small, I don't know what is most similar, either the Inland Empire or Fresno, and go do some research. Figure out what 06 is. That would be my yellow or red flag. Josh, do you build them up and draw them down, out? Keep a steady account with a heads up heap of funds. So what I do is, I guess there's multiple stages. So in the beginning, as I was buying houses, I would add $5,000, right? We went from 1 to 2. Part of the thing would be, okay, we've got to move. And again, I had a separate account, right? That I had this reserve account, separate account, different bank, not connected anywhere. Made it really hard to go get this reserve fund, because I didn't want to think it was a kitty I could pull to buy something in case it was a deal of the year or something like that. So as I drew it down, and again, I only used it for emergencies. An emergency would be a roof leak, a tree falling down, right, damaging something, water leaks. I mean, it would have, like a big roof mount AC. That was what that emergency fund was for. If it was just a basic turn, no, that was taken out of the operational budget. But as I used it, then we would build it back up. Like one time on a property on Yale, we ended up having to put on a brand new roof. I think it was 12 grand. It was a big roof. So we built that back up, I think, over 3 or 4 months. Right? We always want to keep it at or close to that, whatever our reserve limit is. But if it's an emergency, we'll burn it down and we will build it up over time. In the beginning, it would be months to build it up. Nowadays, we're lucky enough we would just move it over. But yeah, that's hopefully that answers your question, Josh. No, I don't see any. California has been really good to me, specifically Fresno, obviously. I have structured my portfolio so that if the world ended, I could still own a bunch of assets free and clear. I like what I'm doing. I believe California offers more upsides than downside. I think Fresno is going to appreciate, which again, I don't calculate in my buying decisions, but it's reality. I think there's a lot of states that look good on paper that aren't good in reality, Texas being one of them. A lot of people come to me and say, oh, why aren't you in Texas? Well, you know what? I spent 6 months evaluating Texas. And if I would have moved my assets from California to Texas in 2008, I'd still be working. Oh my God, why do you say that? Well, it is true that Texas allows you to do sheriff lockouts in under 10 days, under a week for sure. But that is such a small part of my business. One of the big strengths I have is Prop 13. I bought a lot of assets, a lot of houses for under 50 grand that are worth 200 today. And Prop 13 means I'm paying nothing for property taxes. Texas is reevaluated every year. I have several friends that bought houses in Texas 10 years ago that are now, if they couldn't sell them, they'd be losing them because they're alligators. Texas, with their property reassessment, can turn positive into an alligator just with property reassessments. I can't tell you any other different. All these other states that people keep coming to me, you all aren't paying attention. It's not all rainbows and unicorns out there just because you can get somebody out in 7 days. There's a whole lot more to real estate investing. And I think California government leadership, in fact, he's the only person I will tell you that I don't like is Gavin Nuisance. I think he is a communist and certainly is a socialist. He's a thief. He's a liar. There's nothing good about him, but I'm not going to make my investment decisions because one idiot is in the seat of power. His day will come and he will be gone. So yeah, I won't, I don't think I'm making any decisions. Now, I'm not even selling another unit because of 1436. One thing I can tell you I won't do because of it is I won't buy a tenant occupied unit that I didn't qualify. That is one change I am making. You would have to give me a significant discount to buy a troubled property. If you were a landlord that had a tenant that wasn't paying today and you wanted to sell me that thing, you would have to give me one hell of a discount because of 1436. So I'm only buying clean, vacant. I'm only buying vacant properties, not clean. I'm buying vacant properties. I won't buy properties with a non-paying tenant today. Not going to happen. Hopefully that makes sense. Do you recommend to finance an REO foreclosure or just buy straight cash, polish, and refinance later? Angel, that really is the numbers. That's hard. That's kind of a vague question. I mean, obviously, if you can get an REO financed, go for it. A, sometimes they don't give you timing. B, sometimes the condition doesn't warrant. If the only answer is you got to buy cash for speed or competitive reasons, there's no reason you can't buy cash, polish, and refinance later. The BRRRR strategy today is working. It stopped working in March and April because financing disappeared. But as of today, the recording in mid-August 2020, finance is available again. It's more expensive. You have to leave more equity in the building or in the property, but you can get it. It is back. So hopefully that answers your question. If it doesn't, ask a deeper question. That's the beauty of doing these shows live. Have you used cost segregation to accelerate depreciation on any of your properties? No. The simple answer is no. We haven't done a big acquisition, which is where it really pays off, Craig, in multifamily. The last big multifamily we bought for our portfolio came in 2010 or 11. We certainly would. I mean, to answer the root of your question, we would absolutely do it, especially if we were selling something, right? If we sold, one of the things I do evaluate is, as I said earlier to one of the, actually question number one, if we were going to sell an asset and have a big gain, I would look to do cost segregation in a big asset that I bought. Because again, if I can legally shield some income via cost segregation, accelerated depreciation, you bet your ass I'm going to do it. I just haven't had the opportunity to do it since that was introduced. Let it crash and burn. Well, that's not nice. I get that a lot though, but okay. Have a wonderful day, Max. Good morning, Michael. With all the things that you're talking about between A, B, current market, or your 2000. So A, I'm not looking at new markets. I don't have to. I'm lucky. I know one market. I think it takes a lot to learn a market. The 75-day hard challenge is something I lived all those years ago. This or the biggest that. I think the social media swag of Lamborghinis and private jets and fancy watches is, what do I want to say? Well, certainly it's not for me. I don't have that itch to scratch. So because I don't, that means I can live modestly. And when you live modestly, you live on less. So I choose to be happy and help. I'm still growing my portfolio. Hopefully some things you've seen on this channel over the 2.5 years we've been doing it is I share exactly what I'm doing, what I'm buying, what I'm selling, what I'm offering on, what I'm flipping. This channel is dedicated to telling you what I'm doing. So I've been very honest about that. I right now am buying single family homes. I think single family homes go up over the next 3 years. I think multifamily commercial will have some pain, and I will 1031 out of houses, assuming the 1031 still exists, just like I did in my book. And if you don't know what I'm talking about, go get the book on Amazon or Audible and learn how powerful 1031 out of houses to multifamily could be. If you're just getting started, would you wait for prices to get better maybe in 2021 or invest now? So REI Solutions, I believe everything boils down to learning your market. There's no time like the present to learn your market. Learn your market does not mean you're buying something, but it means that you know what a bad, good, average, and great deal is. I believe in every market, in every city, at every time, there are great deals. But I believe most people are too lazy to find them or create them. So if you spend the time to learn your market and you can articulate in 2 minutes what a good or great deal is today in this wacky of all wacky markets, do the deal. I've done 2 deals in the pandemic. I have bought 2 properties in the pandemic that are great deals. It's absolutely possible, but you got to do the work. That's what most people just want it to be easy. Oh, I looked at 5 properties and I wrote an offer and I got one. Well, how do you know? Today's market was so low inventory, clean properties getting bid up. There are lots of investors out there watching Bigger Pockets and all these other things that are getting into bidding wars and not realizing that they're turning a good deal into a bad deal. Don't do that. Do the work. Do I think 2021 will offer better deals? It's all going to depend on your city. I think most real estate markets, when you look at geographically, will be higher in 2021, not lower. If you happen to want to buy in New York City, yeah, it'll be cheaper. You want to buy in San Francisco? Yeah, it'll be cheaper. You want to buy in Oakland? Yep, cheaper. You want to buy in LA? Cheaper. Seattle? Cheaper. Las Vegas? Cheaper. But, there's 10 cities where it'll be cheaper. Everywhere else would be more expensive. So what I would tell you is what I tell everyone and tell my students every day. Do the work and learn your market. Learn it so well that you could tell somebody what a good or great deal is. Until you can tell me what average is, how can you tell me what good or great is? You haven't done the work yet. Yes, Josh, 50K reserve fund for all of my units. Yes. And we've never had an emergency that took it down to less than half that. Yeah, 50K. The deepest we ever had to go into it, we had one unit where we ended up doing a roof and the parking lot at the same time. That was 27 grand, I think. We took that from the emergency fund, but then we just built it back up. Usually it's, a 3 to 6K emergency. So 50K is plenty. And when you have that many units, the law of averages say it just doesn't happen. What happens when you have 170 units is you're guaranteed 3 to 4 emergencies a year. But I've only had one example where there were 2 at the same time. They rarely happen that way. Repeat the question. I thought you guys could see what I see. See it? I'm sorry, Andrew. Yes, I will repeat the question before I answer because I thought you guys could see what I see. I guess you can't. Yes, property taxes in Texas aren't good, and they get reset every year. Again, I have friends who were passionately calling me an idiot for investing in California. You're an idiot. Why do you invest in California? Come to Texas. Blah, blah, blah. You wait 75 days for an eviction. It takes me 7. You're an idiot. You're an idiot. 10 years later, they've gone from hundreds of dollars positive cash flow to negative. Who's the idiot now? Yep. Do you invest in lease option or notes? I am evaluating lease options as a buying strategy. I have done nothing to date. I think March, April of this year, I thought lease option was going to be a tremendous strategy to buy properties this year because I wanted to get that cheap 30-year money. Then lo and behold, the Fed or the Treasury or whoever comes in and does foreclosure moratoriums, all these other extended pretend things. So I don't think lease option becomes a vehicle until the middle of 2021. I do think it's a strategy I have to learn. It's a strategy I want to learn. It's a strategy I haven't done. Do I invest in notes? No. I do have one note on a commercial building I bought during the crash that I sold to an owner operator, but I don't consider that investing in notes. I just did an owner carry on a commercial building that I purchased, fixed, and sold. Gavin is the worst. Yeah, I think he's a criminal. And oh, by the way, he promised to take a pay cut like all the other state workers. And of course, Gavin lied. He did not take a pay cut. If you need any more proof that Gavin is a two-faced snake, listen to him tell everybody he's going to take a pay cut and be a martyr, and then he doesn't take a pay cut. That's all you need to know. He does that kind of stuff all the time. Gavin Newsom makes Jerry Brown look like Ronald Reagan. Oh, I'll just leave that at that. That's funny. I have my eyes in Gilroy, California because it's still affordable, and Amazon just purchased 100 acres for a new data center. I've always felt the Silicon Valley would move south to more affordable land. So now I'm repeating the questions like Andrew asked. That sounds like a statement to me. Yes, I saw the same article where Amazon bought 100 acres. I also saw that they overpaid, at least by some people's account, but they wanted that acreage for sure. The Silicon Valley has been going south forever. I've lived here for nearly 50 years. So yeah, that's the path of affordability for sure. Andrew P1. Yeah, I don't know what that means. Matt, you state that in the beginning you got all of your properties from the MLS and then you checked and recommended we check daily. How do you have access without going through an agent? So Matt, let's be clear. I bought everything because I had access to realtor.com. Realtor.com accesses the MLS. So I always said realtor. Today it's realtor, Redfin, Zillow, and there's probably a dozen others. So I've never had access to the actual MLS. But yeah, I bought it. What I meant to communicate in that statement, Matt, is I had no direct mail, no dialing for dollars, no driving for dollars, no wholesalers, nothing. Everything we bought and retired on was publicly available to everyone. So what I'm trying to communicate, Matt, when I tell that story is you can retire on publicly available stuff if you learn your market, you find out what a good or great deal is. It takes work. I looked every day for 10 years and nearly every day for 20 years. Most people do not have the discipline to do that. Most people only look when they have money. That's another mistake. I've looked always. You never know when you can learn something. Markets change all the time. And if you're only looking sporadically, you're not learning. So it is technically correct to say I didn't have access to the MLS. I accessed something that had access to the MLS. Hopefully that makes sense. Andrew, what are your thoughts on some of your favorite YouTube personalities showing how much money they're making in stocks? Dangerous, striking at an opportunity. I think many YouTube personalities out there do it for the ad revenue. And they will talk about anything that gets them tens, if not hundreds of thousands of views. And we've just gone through a 3-month window where the word stimulus got you 10,000 views. We have seen YouTube personalities do 3 to 5 videos a day saying nothing, but getting 80,000 views. We've seen YouTube personalities go from 80,000 to 800,000 followers by talking about free money that never comes. So good for them. They're clearly serving a need. I promise you, they would stop talking about stimulus if people would stop watching. There is no reason for them to stop. There are many, many channels where their producers are making $1 million a year talking stimulus. Good for them. Same thing with stocks. Same thing with crypto. Same thing with gold. If you can put in a teaser that gets you a lot of views, that's what the algorithm's for. So good for them. I have zero interest in doing any of that. I do all of my sessions, or as many as I can, live because I have no interest in editing. I have no interest in getting fake followers. I have no interest in, I don't need the freaking ad clicks. Yes, my YouTube channel is monetized because heck, why not? It needs to, pay for this or that. But I'm not going to force anything. The other thing I've seen YouTube personalities do that I tried once and it felt icky is pick fights, talk down about others. I'll never do that again. In fact, when I put out a video that's just like yesterday with Meet Kevin, it will be generally positive. I may critique something he said, but the overarching video will be positive. If I vastly disagreed with something he or Graham Stephan or Grant Cardone or all the others out there, I wouldn't put that video out. I don't need to tear somebody else down to build myself up. That's just not going to happen. I did that once. It was like, that's a stupid video. Take that off. So yeah, I think it's dangerous. But again, YouTube is a platform to produce ad revenue. And if you're a producer I think it's dangerous. I remember day trading. You guys should know my story by now. I was a wildly successful day trader for a little bit over a year. And then suddenly I wasn't. It'll happen again. I know it'll happen. When? That's the $1,000 question. I don't know. So hopefully that makes sense, Andrew. And hopefully I didn't badmouth anybody too much. Oh, we can see what you see. Oh, good. So you can see the questions. Okay, I'm just going down in order. Cool. Oh, but not after the live feed. See? These are things I don't know because I don't know how to use this thing. So you can see it, but once I save it, you can't see it. Got it. Got it. Do you see any real risk that Prop 13 goes away? What impact would it have to your business? So yes, I believe Prop 13 will go away. There's a initiative. So first off, for those of you that don't know, Proposition 13 is one of the things that makes California real estate sexy because you're unlike Texas in our earlier example, property taxes aren't reassessed every year. Like for example, I bought a house at 40 grand. It's now worth 300. It's still assessed at the $40,000 purchase with like a 2% increase. So my property taxes on that 40K house are a lot less than the neighbor who bought it at 300, for example. Prop 13 is going to go away. They're going to attack it this year by going after commercial properties like Disneyland. Disneyland is under current Prop 13, and they own, I think I read somewhere like 82 acres in prime LA that they bought for like $1 million. Think about that. 83 acres for $1 million. That place has got to be worth $1 billion today, 800 million, something like that. So California has been losing out on tax revenue for a long time from people who hold forever. So they're going to attack it this year, and it's going to go away in pieces. It'll go commercial industrial first. That's this year. My real fear is they'll go after multifamily next, probably next year or the year after, which will affect me a little. And then when do they go after single family homes? That's the big question. I think that's a bridge too far, but it could happen. California's deficit is going to be so low or so big. Tax revenue will be so low, hence deficit so big. Prop 13 is going to be on the table. Let's say Prop 13 was wiped out across the board. Well, what really will happen is rents will go up. Costs will be passed on to tenants. Rents are going to go up. That's what will happen. I don't know. If all of Prop 13 went away, Josh, I might sell a couple of things. I mean, you're asking what would change, but I wouldn't wholesale liquidate. Folks, my portfolio of rentals that we built in this book pays for my daily life. If I get rid of it, what am I going to do? You can't make money in a savings account. So, yeah. I can't imagine a scenario where we would wholesale liquidate, but I'd probably sell a couple. Angel, I am looking to buy a new primary home. Congratulations. I want to capitalize on the economic downturn. Okay. But in my market, Phoenix, I feel it will just keep appreciating higher and higher. Should I buy now or wait? Angel, I don't know Phoenix at all. I interviewed a guy named Steve Trang about Phoenix about a month ago, I think. I just saw his update for July yesterday. Phoenix is going nuts. I think one of the things that Phoenix has is you're going to get a lot of California residents coming in. And this is a supply-demand problem. And right now, according to Steve, the supply is low. I think it was sub 8,000 units when Phoenix is usually 15,000. So really low. Demand is higher than it's been. I can't tell you where it's going to go from here. Again, I don't know your market, Angel. I would look at employment. What's going on with employment? Because at some point, this is going to be a payment issue. The other thing that's true is you're going to get a remarkably low interest rate today. So if you as an owner had to pay an extra 10 grand, but you got a 2.75 interest rate in the big scheme of things, what's the big deal? The other thing, Angel, that I would think about when making a personal decision in a very hot market is, are you going to live there for at least 5 years? If you're going to live there 5 years and certainly 10 years, really doesn't matter. Really doesn't matter. If you're going to be there 2 years and you were looking to house hack or, whatever, that's a little too risky. That's a little too close. So I guess, Angel, I don't have a great opinion. I'm sorry. Yeah, but you can look up a guy named Steve Trang. He just put out a video on Facebook talking about the July market. Maybe that will help. I don't know. Good old ultimate bargains in Jeffrey. Governor Nuisance? Nuisance. Oh, Jeffrey, you crack me up. Proves without a doubt that leftists don't practice what they preach because they claim to be champions of the little guy. Yes, Gavin Nuisance is a lying, two-faced, lots of other bad things that I want to have recorded on video. Yeah. He is all kinds of what's wrong with politicians. The only thing is I want to say is it's not only leftists. I see the same behavior in rightists as well. I don't play to the left or right. I vote for the person. And the only politician I will talk down about is this freaking guy, because he has repeatedly lied and now is on the verge of stealing again. And I'm not okay with that. Governor Nuisance. Oh, that is so funny. You're awesome. I love you. You're awesome. Hi again. Is there something about notes that doesn't sit well with your overall strategy? No, not at all. I think notes are a great passive way to go. I just find more value in finding value add opportunities in real estate. I don't disparage notes. I think you get a relatively fixed return. I think you can control risk. I think it's the closest you get to true mailbox money, because being a landlord is not mailbox money, at least not truly passive mailbox money. No, I'm a fan of notes, not at all. I just choose to use my expertise, use the inefficiencies of the real estate market to get better deals. That's why. Is it best to avoid mortgages on rental property? Oh, Dave Ramsey-ish type of questions. I believe it is one of the most cardinal sins in the beginning of building a portfolio to avoid rental property mortgages, especially if you can get a mortgage with a 3.5%, 30 years. It is also a sin to do high leverage, right? I'm conservative, more down, 30-year fixed, all that stuff. Now, that's the beginning. When you are building your foundation, get 30-year money, be conservative, put an extra 5% down than you think you have to, because you need to hold forever. But when you're getting ready to be done and you're closer to exiting, there's absolutely nothing wrong with getting a set of your portfolio free and clear. I call it the oh shit pile, right? Just in case the world comes to the end, you have a pile that no one can take except the state with property taxes. But let's hope your rents are enough to cover that. So in the end, I have two thoughts on that. In the beginning, it's the worst advice I've ever heard. At the end, pretty good advice. Hopefully that helps everyday exercises. Dalton Adams, you believe in good debt. Dave Ravenly hates all debt. Does that mean he hates good debt? Oh, I think you've answered your question. Dalton, Dave Ramsey hates debt. Period. Full stop. In his mind, there is no good debt. That's the wrinkle. I believe if you can find a property that cash flows, conservatively financed, fixed rate debt, and you can hold through any market, that's good, if not great debt. Dave Ramsey does not believe there is such a thing as good debt, in my opinion. I don't know that I've heard him say that, but that's what I think he believes. So again, let's just a real quick question, since we're about 43 minutes in, got 48 people watching now. Do me a favor, hit that subscribe button if you haven't already, as I'm looking to get to 9,000 today, and I think we were only like 26 people short. So hopefully there's some people watching that can help me out. Also, we only have 19 thumbs up, and I've been talking for 43 minutes. That's not cool. That's not very thankful. All right, never mind. All right, where did I go? Okay, Josh. So Josh's question, would it be easier to get an investor loan on purchase or pay cash for a house than refinance it? How long do I wait to refinance? So that really depends on you, the borrower, Josh. In today's market, if you don't really own any real estate, or you have less than 4, it's remarkably easy to get a purchase loan, assuming the property appraises and is clean, not tore down. If you're someone like me, it's probably easier to do a cash out refi, but I'll get less. The other thing, Josh, that you may not know is the lowest rates are for purchase money mortgages. Refi rates are usually a 0.5 point to a full point higher. So when you see 30-year loans at 3.5% for an investment loan, that's a purchase money loan, not a refi loan. They're different rates, because a refinance in a bank's mind is generally riskier. Real ultimate Jeffrey, you're so funny. I think it's realtor. So I think it's the first one. Yeah, I agree. 45 people watching, 10 likes, no love. But in fairness, that's my fault because I don't ask for them. I just talk. Mark Hoffman, what should I do with 100K cash? Well, first off, congratulations. I don't think there's many Americans that could say that. What I think I would do with that is I would try to figure out what is an average return for my market. And let's just say the average return is 6%. I would go try to find 8%. I would go find great deals. The other thing I would tell you with 100K cash in this wacky market is don't be a rush to spend it. It's very likely you're in a hot market and you're going to try and 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 not get anything. Be okay with that. Don't overbid. Don't get into bidding wars. If you keep your 100K until April of 2021, but you've tried for months in a row, I want to pat you on the back and say congratulations. I would tell you to go learn your market. I don't care if you have $1 grand, $100 grand, or $1 million. If you are not learning your market first, you are both an idiot and a gambler. You choose which one you like. That's my opinion. Californian is scaring millionaires and the wealthy away. How do these idiots get in power? Well, they get in power, Angel, because it is easy to pick on the rich and get the others to vote. That's why. California, just like New York, is going to have a horrible decade. The millionaires we just saw a pre-IPO company move to Colorado. They moved to Colorado on purpose a month before their IPO. If you guys don't think that is because of taxes, you're not paying attention. California just lost somewhere between $50 and $100 million in tax revenue because of our idiot legislators. I just looked the other day because of AB 14, whatever it is, 82 or 62 or whatever it is, 36. I think we're like 80% Democrats. That's got to stop. The fact that we have more than 60% Democrats mean that they're going to get any bill they want. And that's why I think AB 1436 gets approved. All they need is 66% to get approved. Just vote party lines. It comes across. That's why this constitutionally illegal thing is going to get approved. California. California will not be the land of milk and honey for the next 10 years. It's going to be places like Texas, Florida. And 4 years from now, California and New York are going to go, what happened? Where'd everybody go? Nobody loves me. No shit, nobody loves you. You tax success, you idiots. Well, hopefully that probably went across the line, but oh well. I said it. Milton Friedman, they want to end renting. It will be buy only in the future. I don't know. I can't imagine that. There are lots of reasons people rent. I certainly see, I'm on record as saying we're going to see the highest owner occupant rates ever, but renting is not going to go away. There's a lot to own. Now, is there a portion of the government that wants owning only? Probably. But there's probably an equal portion that wants renting only. Yep. Milton Friedman, that is one of the big reasons I don't like Gavin Nuisance is because he overrode voters. You ask us to vote on something, we vote on it, then you tell us to F off and you say you're smarter than us. You freaking son of a gun, why waste our time? That one really annoyed me. Arthur, single-family homes are largely out of price given current prices. However, I see a bunch of condos that will pencil stuff I can pick up for 60 to 100K in good areas. Arthur, you know my opinion, man. Learn your market. The only thing I can tell you about condos is they have that home association fee, which A, is like a mortgage you can never pay off, and B, goes up, doesn't come down. And oh, by the way, just full disclosure, I own one condo with an association. I happen to own it free and clear, but the association fee eats up 35% of the rent. It happens. Oh, Belgium. Shout out to folks from Belgium. Awesome. Good luck. Thank you for watching from Belgium. I hope you have a good day. It's got to be late. What is it? It's got to be what, 6 p.m. there, maybe 7? I don't know. I don't do time zones well. Thoughts on condos? Kind of did that. I think if condos work, condos work. I think most people don't appreciate the association fee never gets paid off, and the association fee only goes up. So be careful. Thank you. Unfortunately, I'm in LA. It's okay. Other than traffic, you know what? I think LA is going to be cheaper in a decade. And let's be clear, Mark. I don't know if you know this. I'm in the Bay Area, so we're both in California. Hi, Melissa. 2 days ago, huh? Welcome. Thank you. Thank you. Let me know what you the book. Anybody? Here's a question. Thank you for bringing this up, Melissa. 54 people watching, hopefully thousands later. If you're still watching after 51 minutes and you haven't gone to Amazon or Audible and left a 5-star review, could you do that for me? That'd be great. I'd love to see some more reviews. Even if it's a quick, great book, that would be great. Thank you for the support, Melissa. Milton, never thought I'd see this happening in California. I can't say anything. I own, what is that, Brandon? I own 3 investment properties, 2 bought this year that cash flow. I would like to buy another, but ran into being 50% debt to income, as income from the properties hasn't been counted. How do you overcome this? Brandon, typically what happens is after a seasoning period, which will depend on your bank, could be anywhere from 6 to 12 months, it will be counted. So you just have to wait for that seasoning period to get by. Ask your lender. I've heard people say 6 months, and I've heard others say 12. So it will eventually be counted, and it will certainly be counted once you file your taxes. So it will be counted. Don't worry. They're only building condos, not apartments for rent. Oh yeah, Milton, absolutely. Well, I mean, why would you build rentals today? With all the stupid laws going on in California? Absolutely. The people that are going to be hurt the most by what California politicians are doing today are the people they're trying to help. We will 100% have less affordable units. We will 100% have less rentals because of these idiots in Sacramento. It'll feel good for a minute, but trust me, it won't feel good in a year and a half. All right, couple more questions. We got to wrap this up because I have a 9 o'clock call. Oh, it's 6 o'clock there. Thanks. There are some apartments being built for rent, not many. The Facebook live stream will be at 10 today. I moved it. I had a 9 o'clock call that got canceled, but I've already communicated it will happen at 10 for my students. So it'll happen at 10. I didn't think it was fair to change it last minute. So I am going to go have breakfast at 9 o'clock with Olivia and then do my student call at 10. So thank you, everybody, for watching. This has almost been an hour. I like these live streams. I will remember to at the end of the day, hope you enjoyed this. Thank you for all the thumbs up. Remember, help me with subscriptions. Ask your friends to come. Love to see us get over 9,000 today. That'd just be cool on the march to 10,000. Have a wonderful day, everyone. Take care.